Hello friends! In this video, we'll talk about how to correctly read Japanese candlesticks. Many novice traders believe that each candle or candlestick pattern carries a trading signal by itself. But in practice, this is one of the key reasons for mistakes at the start. It's important to immediately fix the main principle. Candles do not carry information by themselves. They start to mean something only in the context of the market. The same candle can mean a continuation of movement, a reversal, a pause, or just market noise. It all depends on where it formed, after what movement, and in what phase of the market. Candle structure, what it really shows. Let's look at the basic structure of a candle. Each candle shows only four things: the opening price, the closing price, the high, and the low. Everything else is already interpretation through context. The candle body is the distance between the opening price and the closing price. The upper shadow shows the maximum price the market reached. The lower shadow is the minimum price for that period. A green or white candle means that the closing price is higher than the opening price. A red or black one means that the close occurred below the open. And that's where the objective information ends. The candle doesn't say buy or sell. It only records the result of trades already made. The main mistake of beginners in reading candles. The main mistake of beginners is that they try to read candles in isolation. They saw a long shadow and decided it was a reversal. They saw a big candle and decided a trend had started. But without context, these conclusions make no sense. Context, what it is and why it's important. Context is where the price is relative to levels, what movement was before it, is the market accelerating or slowing down, is there momentum, or is the market in balance? It is the context that gives meaning to the candle. The same candle in different situations can speak of opposite things. Practical examples of reading candles in context. Let's look at practical examples. On the first chart, we see a candle with a long lower shadow. Formally, it's a classic hammer. But the key here is not the shape of the candle, but the place where it appeared. The candle forms at the support level after an impulsive decline. This suggests that the market does not accept the price below this level. This is a sign of a possible end of seller pressure and the market's transition to balance or correction. On the second chart, the opposite situation. The price approaches resistance, and instead of an impulsive breakout, we see a series of small candles with short bodies. There are no bright patterns here, but the market gives an important signal. Buyers can no longer move the price up as confidently. Momentum is weakening, and the market starts to stick at the level. Practice assignments. Now for the important part, practice. Without it, everything we've covered will remain theory. Assignment 1. Find a candle on the H1 chart with a long shadow, upper or lower. First, simply describe its shape. Then answer, where is it located? After what movement? What happened next? Compare. Did your understanding of this candle change when you looked at the context? Assignment 2. Find one strong impulsive candle and one weak one with a short body. Ask yourself, in what phase of the market did they appear? Did the movement continue or stop? Who is controlling the market at that moment? Buyers or sellers? Assignment 3. Find two similarly shaped candles in different places on the chart. Analyze the context of each and answer, why did the same shape give a different result? Assignment 4. Find a section of a trend with a correction after which a strong impulsive candle appeared. Is this a reason to enter or confirmation of a scenario? What happened before this candle? Did it strengthen an idea that had already formed? The goal of these assignments is for you to start seeing not hammer, but the struggle of market participants. When that happens, you'll stop looking for magic patterns and start reading the chart like a professional. Summary: candlestick analysis as a skill of reading the market. Let's sum it up. Candlestick analysis is not about memorizing pattern names and not about searching for beautiful figures on the chart. It is a skill of reading market behavior. Each time you look at a candle, ask yourself, where's the price? After what movement did the candle appear? Is there a level? Is the market continuing the movement or losing momentum? If you start reading candles through context, the chart will stop looking chaotic. And this is where a conscious and professional understanding of the market begins. But candles are only part of the analysis. In the next session, we'll talk about indicators. More precisely, about why 90% of them are useless and which 3 indicators really help in trading. You'll be surprised how much simpler your chart will become when